Assalamu alaikum. I would like to welcome everyone to our second class or lecture. And so these are the topics we are going to cover. And I hope those who watched the first video, that is Introduction to Market Structure, understood the class. If there is any question, if you join the Telegram group, which I dropped the link in the description of the last video, there is I think you can send a direct message. So whenever I'm opportune or whenever I have time, I can reply your messages. So there is something I forgot to discuss during our last class. So I would just like to pinpoint those things before we head into our topics for today. When I talked about candles, actually, if you notice, each candle has a line like this, a line, and then this thicker part, we call it a body. So this line here is called a wick. And what this wick signifies in the market, it shows displacement or rejection. So like when this candle was forming, maybe when it rallied and reached towards this level, we had a sudden push downwards. So that's what created this wick. Likewise, this it kept on moving higher, but when it came to this level, we had a sudden push, which brought back the market towards this level. So with this little knowledge of candle we have, sometimes we can anticipate the market to see where market is heading to. As you can see, since we had continuous rejection as market headed to this level. Subsequently, we had um, two black candles. If you're on your default trading view, this is going to be red and this is going to be green. So I changed mine to black and green. And also, green candles are called bullish candle, while likewise, red candles, or in my case here, black candles are called bearish candles. So bear in mind, maybe in the future when I describe market direction. So when the market is rallying up, we say the market is bullish. When it's rallying down, we say the market is bearish. So it's very important for one to know how to read candles. And you can see here, when market was coming down, we had this explosive push upwards, and then after that we had a sudden push upwards. So this type of big or large body candles are called expansion candles. When you begin to see expansion candles such as this, then you can anticipate market is going to continue rallying. And if you notice this uptrend here we had, market kept on rallying, which if you see here close, if you watch closely here, we had more bullish candles as opposed to the bearish one. So that is it for our last class. Today we are going to begin our topic with what we call order blocks, fair value gaps, and breakout structure. Usually, I don't like defining what an order block is without defining this because the fair value gap here qualifies what an order block is. So, firstly, what is a fair value gap? A fair value gap is defined as a gap between three candles. So, this is an example. So, I have this candle here, this first one, this second, and then the third here. If you notice from the top of this wick to the low of this candle's wick, I draw it out, I drew it out. We have a gap here. So this gap is what we call a fair value gap. So if you understand this concept, this candle here, since market is going up, we can identify this candle and then we can call it a what? A bullish fair value gap because we're expecting market to come back into this fair value gap to support price upwards. But basically, the simple definition of an order block is where we put our pending orders for buys or sells. So I think I clarified in my first class, you should go and look what buys are or how to do all those stuff because I said I'm not going to talk about them. So this is an example of a bullish fair value gap because as market is rallying up, we wait for market to come down. Then we look to put our pending order here. This fair value this order block, sorry. Well, let's find another example. We have this first candle here and the third candle because we have a second candle here. So this gap is what we call a what? a fair value gap. Why do we identify fair value gaps in the market is because whenever market is moving towards a certain direction, we usually anticipate market to come back, fill into this fair value gap. But here you see market has not yet filled this fair value gap, meaning this candle probably will have come into this gap here. But maybe let me see if I can see an example of a filled fair value gap. We have one here. So this is an example of a what? A bearish order block. Because market is rallying and we're anticipating market to come into this what? Fair value gap or reach into this order block to continue going lower. So as you can see here, market reached into this fair value gap here and then it continued going lower. So that is just it for fair value gaps and order block. Sometimes it can be a bit confusing, especially for beginners. So you just take the video back and rewatch it, and you can ask questions in the Telegram channel. So, what are break of structure when BOS? If you understood what swing points are, then I think you shouldn't have any problem understanding what break of structure is. So, basically, a break of structure is when we have market moving ahead of an old swing point. So here we can call this a low, this also a low, this is a high, this is a high. So when this market was coming down, it moved ahead of this low here. So we have a break here. We can call this a break to the downside. Here also we have another break to the downside. So that is for a bearish market. A bearish market means a market that is trending lower. So can create an example of a bullish market here. So we have a break here to the top side. Here also we have a break to the top side because this market went ahead of this old uh, swing point here, this old high. Likewise here, market rallied ahead of this old swing point here. So from our chart here, you can see an example of a break of structure. We have one here. You can identify this as a swing point. Also, we have this, and then we have this. So you can. It's good as you're learning. You should be able to identify a lot of them. The more you do them, the more you get familiar with what break of structure are. We have this break to the downside. We have this break to the downside. So I think it's quite straightforward. You don't need to make it more complicated than what it already is. So I think that should be all for today.